Series A fundraising. How can finance leads prepare properly? If you're working in a fast growth startup and the phrase Series A fundraising has started being part of leadership conversations, then you know the pressure's about to kick in. And if you're a finance lead, let me be quite clear, this is your moment. Series A fundraising isn't just a milestone for the business, it's quite a high stakes test for your numbers, your systems, your processes, and your ability to handle the pressure. So whether you're stepping up to your first finance leadership role or you've done this once or twice before, getting ready for a Series A is a big job, but it's also quite rewarding and a project that you work on in your finance career. So I want to walk through what actually needs to happen behind the scenes to be Series A ready and what you as a finance leader need to get on top of before the conversations start with investors. My name's Alysha Randall and I'm a fractional CFO, and I also run courses for new and aspiring CFOs in startups and scale-ups, and I'm also the author of Financial Leadership Fundamentals, How to Become a CFO in a Startup or Scale-Up. So as I mentioned, Series A fundraising, it is a big deal. It isn't just about getting more cash in the bank, but essentially it's probably your first serious investors. You may have friends and family and seed investors that are often angel investors to start with. But this is the first time you're really trying to convince bigger investors that this business has legs. It's usually a bigger amount. You may have raised a few $100,000, maybe even a 1 or 2 million before, but Series A funding can get much bigger. You're not going to get a Series A funding of about 100 million anymore. That is long past us. But getting a Series A fundraising 5 to 30 million isn't too unheard of. 30 million is very top end. I'd probably say 5 to 10 is what I see most commonly nowadays. At the Series A, you're proving that this business is scalable. It should have product market fit, and the numbers should hold up to scrutiny. So at the seed stage, you're convincing investors to invest into the vision. That is what the founder is ultimately doing. But at a Series A, they're investing in traction, and they're wanting to see that the systems are there to support the scaling. And ultimately, that's where you come in. So the first step is to get the investor ready numbers. So your financials will be picked apart. I would say that a few years ago, 2021 backwards, Series A fundraising, you wouldn't really have much of a due diligence, but nowadays you will. So they will check your financial numbers. They will check for standardized reporting and the sanity check every line of your P&L balance sheet. So ideally, you want to make sure that you are ready for that. So this includes proper revenue recognition policies. So you understand you have a consistent way of revenue recognition and you have a policy to back it up. Clean separation of cost centers. This is particularly important if you are investing in particular areas of the business. Generally, in the startups that I work with, it is tech, R&D, and marketing and sales. So you want to demonstrate those areas within your P&L. Realistic growth assumptions. So in your investor growth model, the growth assumptions in there should be realistic, but also exciting. It's having that fine balance. You don't want that to be too conservative because the investors aren't going to get excited in investing in the company, but you don't want it to be too unrealistic where you have massive, unsubstantiated hockey stick growth. So make sure you have that fine balance. Consistent accounting treatments across the board, similar to your revenue recognition. Make sure that it's quite consistent. Your accruals and prepayments are done right. Yes, even at this early stage, just make sure that your margins aren't all over the place. So if you're still using 6 different Google Sheets and manually reconciling your Stripe revenue, it's time to upgrade. So take a look at my finance tech stack and start implementing some automations before you go to investors. The step 2 is nailing your financial model, your growth model, your budget model, whatever you want to call it. Your investors or potential investors will absolutely take a copy of your financial model because you're quite early stage. At this stage, it's probably still in Google Sheets or Excel. I do expect that to change over the next 1 to 2 years, but at the moment, a budget model, automated budget model is too expensive for this stage business. So it's probably in Excel and Google Sheets. And the investor will want to take a copy. And if they're a VC or a PE, they'll chuck their analysts at it and they will crawl all over your budget model. So just be aware that that is probably going to happen. So you need to be ready for that. So the Series A fundraising deck or forecast is ultimately your strategic tool in demonstrating how the business is going to scale, where the money is going to go, what metrics really matter, and how you're tracking against them. So at a minimum, your model needs to include revenue assumptions that are tied to the funnel metrics, headcount plans and hiring timetables, burn rate and cash runway, unit economics, and potentially scenario planning. You may want to have a little bit of downside protection. So in a worst case scenario, how are you going to mitigate against that? I would say that right now we're in 2025. Investors in Europe in particular, and actually even in the US with a recent fundraise I've been doing, quite risk averse. So you need to prepare for that. You don't need every bell and whistle, but the budget must be coherent, defensible, and aligned against the pitch deck. Step 3 is building the data room and keeping it organized. Again, do this early doors. So investors will ask for a lot and quickly, and you want to know what you're doing and avoid, say, a 2 a.m. data scramble to get your data room ready. So things to include will be your financial statements, historical and forecast, your monthly management accounts, a cap table that's clean and up to date, customer metrics and cohort data if required, contracts, tax filings, and funding history. I do have a full post on preparing your data room, so I'll leave a link for that above and below. But basically, you want it to be ready and easy to navigate and easy to share. So Google Drive is generally the easiest. Again, at this stage, you can pay a few £1,000s for a software data room. I don't think that's necessary at this stage. Step 4 is aligning with the founder and pitch deck. So Series A fundraising isn't just about the model. It is still about the story. It is still about the vision. Your founder is going to pitch a vision, and so your numbers need to back that up. So make sure you're aligned. So when you're reviewing a finalized budget, I would do it at the same time that you review the pitch deck before it goes out. You align on key metrics and milestones, so make sure they say the same thing. I can tell you right now, if it doesn't, an investor that'll be one of their first questions. And translate that vision into financial language. So just have a conversation with founders. Some founders can overpromise on a pitch deck, particularly with timelines and targets. So your job isn't to tell them it's wrong. It's just to pressure test the plan and make sure that the projections hold up. So make sure the two of you are aligned. I've also got a post on how to support founders with a pitch deck. So again, above and below. Step 5 is preparing for a due diligence before it starts. A due diligence is lighter than later stage rounds, but it does still happen. It is still happening at Series A. So you want to back up what you've reported. So how do you do that? You document your policies and assumptions. You reconcile your revenue sources. You review your contracts and make sure they match the financials, and you'd be ready to explain any anomalies. So taking notes is really important. This is why commentary and management accounts is always worthwhile keeping. So series fundraising, it is stressful. I'm not going to lie. It's fast moving. It's high pressure. Sometimes the founder becomes incredibly emotional because there's going to be big highs and big lows. And founders will be juggling 10 things at once, and investors want something from you every single day, and your inbox will never stop. But as a finance lead, your job really is to stay calm, stay focused, and stay organized. So You are the one that will bring structure to this madness. You are the support network for the founder, so make sure you support them. This is, preparing for any kind of fundraise is the type of thing that we teach inside the Financial Leadership Fundamentals course, both the book and the program. So from building investor ready numbers to preparing for due diligence, gearing up for a Series A or a Series B or Series C. So if you want to get it right, it's probably worthwhile checking that out. And don't forget, we've got cash flow templates, data room checklists, a whole workshop series. If you are a finance lead within a startup or scale up, then don't forget to subscribe to this channel and take a look at all of the resources we have available. And I'll see you next week. Cheers.